Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders for general trading, www.stochastic-macd.com. For Elliott Wave trading, www.24elliottwaves.com. For fractal trading, Fibonacci trading, and volume trading, www.dayprotraders.com. Today is the 22nd of June 2014, and the time in London is 59 minutes past 3 p.m. In New York, 59 minutes past 10 a.m. The title of the video is Eyes Wide Open Forex Trader. We're going to analyze the Euro USD, okay, a technical analysis of the Euro USD and what is happening in the Eurozone, how we can trade the Euro dollar currency pair throughout 2014. This video is for educational purposes only. It's neither a solicitation or an offer to buy or sell any financial instrument. Very, very important, okay? Let's get started, okay? We're going to analyze the Euro USD. Few weeks ago, the ECB, the European Central Bank, okay, has cut interest rate from 0.5 down to 0.15. This is, okay, a devaluation of the euro currency. So if the euro is devaluing, the Euro USD in normal condition should be going down. That's the theory. But if you look here, we're on a weekly chart, we can see that after the devaluation, the interest rate cuts, okay, and also discussion about negative interest rates for savers, which mean negative interest rate, which means if savers are saving more money, the bank has to pay, okay, for these savers, forcing the banks, okay, to lend money. Instead of holding the money, they will have to lend it to earn interest on it to compensate for the negative interest. All right? We can see that, okay, this is 2014, okay, the price from February 2014 was going up, and then recently it went a bit horizontal, and it started going down. Should we buy the euro or should we sell the euro? At the beginning of this year, at www.youtube.com/JawTrio on our JawTrio channel, I recorded a video, okay, about how to trade the Euro USD like a professional, okay, trader. In this video, we want to explain to traders what is happening, okay, what we need to pay attention to. But before I forget, there is one key level. So remember, if you want to buy, okay, you want to buy at a valid support level. All right. Whether you are buying anywhere, you want to make sure that where you are buying, the entry price is the most important thing for a day trader, for swing trader, for position trader, and also for an investor. The price at which you enter the market is very, very important. All right. So there's one key levels that we want to pay attention to. So if you want to sell, you want to sell at a valid resistance level. That's what we are doing all the time. The market will overbought at a valid resistance level. The market will oversold at a valid support level. Provided that the fundamentals are solid, we will buy. If the fundamentals are weak, we will expect the price to be below, okay, the support level. If you want to sell at a resistance level, but the fundamentals are improving, okay, we will expect the price to break above the resistance level. The first key levels that we want to pay attention to, whether you are day trading or swing trading, you want to trade around key levels, essential price level, vital price level, all right? A lot of ordinary traders spend their time paying attention to the indicators, okay, technical indicators such as the stochastic, the RSI, the CCI, okay, but the professional or the commercial traders pay attention to key levels, levels where we have value, okay. The first key level is the smart media line. The smart media line is this line here. It's at 134.23. This is the smart media line. The smart media line will divide the market into two zones, the bullish zone above the smart media line and the bearish zone below. You can see that since the euro this year was above the smart media line, we will, if you want to buy, you want it to pull back, okay, to pull back on the edge. All right. So at the beginning of the year, I said to traders that we are bullish towards the euro USD and we are bearish towards okay, the dollar Swiss franc. That doesn't mean that we just go and buy anyhow, but when we see a value signal, we will buy. But because we are below the high of 2013, anytime we are buying, we need to be very careful. Because why? We are below the high of 2013. Price has failed to display a new high or goes back below, okay, the high of last year. So though we are bullish, we need to be careful until we go above the high of 2013. The high of 2013 is at 138.93. This year the price went above it only to come back down. So because of the decision that has been made by the ECB, cutting interest rate from 0.5 to 0.15, okay, the general intention is to sell the euro dollar. This is about the fundamental, okay, intervening, okay, in the market, okay, how we can combine the technical analysis and the fundamental decisions that are made by the central bank, the economy news, how they are affecting, okay, technical trading. So people start selling the euro, all right. They were busy selling the euro, all right. Though the market pattern was bullish, but because there was this decision to cut the interest rate, which is a kind of a devaluation of the euro, okay, traders responded and started selling the euro. You can see here, for a few weeks, the euro was going down. And again, there was some problem in Iraq. We know that Iraq produced oil, so because of okay, the insecurity in Iraq, crude oil start going up. You remember what we said? The euro USD is what? The leading currency pair, but it's also positively correlated to crude oil. If you are trading Forex or any financial instrument, we must pay attention to market indicators. One of the market indicators that we cannot discard or ignore is crude oil. Very important. Professionals that are trading commodity, that are trading stock, that are trading Forex, constantly are watching crude oil because crude oil is a market indicator. So apart from your technical indicators, I recommend to traders to pay attention to crude oil. All right. So in normal condition, professional will sell, okay, the euro USD if crude oil is bearish. A professional will buy the euro USD if crude oil, okay, is bullish. So recently, because of the insecurity in Iraq, okay, crude oil was going up, and for that reason, the euro also recovered. You can see this week here, it start going up. Okay, it's going up. But you can see that beginning of the year, the price went up first, okay, and then start going down from May. It start going down, okay, start going down, but only coming down well. So we were above the smart media line at 13423. Note this level down for the whole year. All right, this is the smart media line. If you don't know what is the smart media line, I will recommend to you the article that we write talking about okay, trading critical price level. Google it, okay, trading critical price level, and you will see an article, okay, talking about okay, the smart media line, okay, and the root smart media line, okay. This is what we want traders to understand, okay? The smart high, the smart low, and the smart media line, okay? The dynamic, okay, smart media line, the root smart media line, okay? What is a dynamic root smart media line? What is the root smart media line, okay? Here it is. For the euro USD, this level here, 13423, is the root smart media line for the euro USD throughout this year of 2014. You want to know. You want to know. You can see here, all right. If you knew this in April, if you know what is the smart media line, in February, when people were buying here, you will understand what is taking place here. You can see that the year has started here in January, and the market decided to bring the price well near the small median line. They bring it near, they want to buy, so the price was bullish, okay, in the last quarter of 2013. Beginning of the year to 2014, they bring it down near the small median line, a powerful trading tool. And from there, we have this bullish engulfment on the weekly chart. And from there, it was boom, 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 up near this trend line. I'll come back to this trend line. So now, because of the insecurity in Iraq, crude oil was going up, which is a market indicator. The market responded, but before that, they pushed it again near the small median line. I would prefer, remember, my expectation is not what the market will do, but I would prefer the market to sell again the euro to bring it near, okay, the small median line, okay, before bringing it up. So that would be great. That would be great to bring it back near the level of, let's see, the level of 13482. But we will see, because of the insecurity in Iraq and crude oil going up, it may be difficult. So right now we will see. Okay? So this is what's going on. Talking about the market pattern, okay? The market pattern is bullish. You see this trend line that we draw. In fact, I'll switch time frame and go to the monthly chart. So if you trade currencies, the Euro USD is the leading currency pair. You want to pay attention to the Euro USD. If you are trading any currency pair, very important. There are currency pairs that are positively correlated to the Euro USD, such as the pound dollar, the Australian dollar, okay? These currency pairs will move in the same direction like the Euro USD. The dollar Swiss franc will go in the opposite to the Euro USD. Unless, okay, the Euro, okay, is at a cycle point. Very often as a cycle point, the correlation may change for a while before readjusting itself. All right. So on this monthly chart, joining this point where my cursor is, the low of this candle here on the monthly chart, that's the month of July 2012, the low of that candle, and the low of July 2013. All right. Apologies to traders. We have this blue trend line here, this one here, the rising one. So the market pattern is bullish on the monthly chart. So when the market pattern is bullish, we want to look for opportunity to buy on the edge of the rising trend line. So that's why I would prefer, I will show you on the weekly chart, to bring it down again near, okay, that would be nice, to bring it down near the 13423 before bringing it back up. All right? So the market pattern is bullish. So we cannot fight the market, okay? So traders that were selling the euro, it's not bad decision because the price hit the upper side of this rising channel, all right? So they sold it, they bring it back again to the lower part of the channel. But it was a risky trade, so, but it's near, okay, the edge of this trend line here, okay? You want to day trade, you want to swing trade, day trade on the edge. So the market pattern is bullish on the monthly chart. All right? You see now? So, but talking about trading zone, if the euro will survive, okay, the bearish pressure, it should come above this trend line here. The trend line, the blue one here, you see this one? Joining the high, which month it is? 1 second. This is July 2008, July 2008, joining the high of July 2008 and a high of May 2011. This allow me to draw this trend line. So for the euro to be completely bullish, all right, it must come above, okay, this trend line here, this one. So this is an decision period, but again the euro slowly is in a rising channel, so it pull back near here. I would prefer it to go down again 1 week. That would be nice. That would be perfectly beautiful, near the level of 13423, giving okay, to retest, okay, the small median line, okay, and then from there, so come near the 13423, and then from up I move my line. Okay, 1 second please, I will get it right soon. Let's put it back to the correct place. 13423, okay, that's the level I'm looking for. Put it back exactly there, okay? So what I was saying to you, we will prefer it to go down a little bit. Hopefully they'll do it at least on the edge of this trend line, this one, okay? That will be beautiful, all right? Or even to retest it, pull back like this, and then from there we receive a gorgeous bullish signal to take it out of the bearish zone or the indecision zone. This is indecision zone between a declining channel and a rising channel. But the bullish zone is this section here above this trend line. Okay, so we will prefer the euro. That would be nice. It may not do it. So if the bulls are very aggressive, they will push it up straight away from here. But we will wait until the end of the month of June, because this candle here, remember, you want to take a position, especially position traders or investors. Okay, it's better for a candle to close. This candle here will close, okay, next week. Okay, okay, at the end of June. Wait for it to close fast, and then we will see what's going to happen. Whether this hammer will remain in place, followed by a bullish candle, a bearish candle, a hammer, and a bullish candle. Okay, that's a bullish candlestick pattern. Talking about, okay, Steve Nissen. 1 second, please, traders. Just to note something down for myself here. All right. That's it, down. To remind myself about something. So we will prefer in best scenario to pull back nicely before zooming above, okay, at the trend line, okay. So break above it, okay, this trend line here, and then come back and retest it, and from there, boom, up. All right, okay, that's my expectation. All right, the next key level that a trader must remember, especially traders that are day trading and swing trading, for the next 2 weeks, maximum 3 weeks, okay, the short-term equilibrium price level for the Euro USD is at, okay, note it down, very important, it's at a 13638. Is the turquoise horizontal line here at 13638. So for next week, as a day trader or swing trader, you must pay attention to, okay, that turquoise line. Here it is. In fact, the market, you see, retest it here, and then it's pulling back. So I would prefer it to go down a little bit more, okay, before bringing it back up, okay, above. So if you are below it, priority to sell signal below the short-term equilibrium price level, and priority to buy signal above the short-term equilibrium price level. We will see. Before I forget, ladies and gentlemen, next week, okay, is the last week of the month of June. How to day trade the last week of the month. I will be posting a video on YouTube, okay, www.youtube.com/dayprotraders, not Jotrio, dayprotraders. On Tuesday, I will post that video on YouTube, how to day trade the last week of the month. I have posted a video at Jotrio channel where I say to trade. The title of that video was how to day trade, okay, the first week of the month. So it is easier to day trade the last week of the month. Good news. So next week, you may find it that it's easier, unless we have some crazy economy news. Normally, should be easier for most traders to day trade during the first week of the month. All right, but I will be posting that video. It is easier to day trade during the last week of the month, not the first week. The last week of the month is easier to day trade. The first week of the month can be very tricky to day trade. So last week of the month is easier for day trading. So Next week, starting the 23rd of June 2014, that's the last week of the month of June, okay? So up to next Wednesday, up to next Monday, okay? So from 23rd to the 30th. So we have 1 week left plus the following Monday. It's normally easier to day trade during the last week of the month. I don't want to go into why and how one can day trade during the last week of the month. Stay tuned and check our YouTube channel, Day Pro Traders, on Tuesday after 1 p.m. London time, okay, 1 p.m. London time, that's 8 a.m. Eastern time. Check our Day Pro Traders channel for the video that we call How to Day Trade the Last Week of the Month. So, very interesting. So, next week is the last week of the month. Day trading normally should be easier, okay? So for day traders and swing traders, we must remember the level of 136.38, which is the short-term equilibrium price level for this currency pair, the euro-dollar. So we have talked about the smart median line, 13423. We are now talking about this, the short-term equilibrium price level, 13638. Do not forget these two key levels, especially if you are TSTW trader. Do not violate the market patterns. So on this daily chart, what do we have? The channel that we have drawn on the monthly chart is still valid here. You can see that it hit the top and it's rolling it down. That's why I'll say to you, I would prefer it to roll it down more. But watch out for this one. Okay, we can draw another trend line like this, here like this, okay? This one, just above the one I draw first, like this. So watch it, watch it. All right, the market pattern is bullish. All right, it's bullish. But you want to buy at a value support level on the edge. All right. Are you with me? Okay. If you look, we go back again to the monthly chart. 1 second, please, traders. Just to do something here. I'm still here. Beautiful. All right. Now, thank you for your patience. So here we are. So on the monthly chart, I say to you, this level here, July 2008, joining this point, and this point, May 2011, okay, we have this trend line, okay. Normally, you see it's bearish, but as I explained to you, the ECB has cut interest rates. Majority of market participants want to sell the euro, but at the same time, there are some uncertainty, insecurity in Iraq, pushing crude oil up. Crude oil is a market indicator. Professional will pay attention to it, and they can afford. So traders that were selling the euro because the ECB has cut interest rate were forced by the circumstances in Iraq to manage their trade carefully, because crude oil started going up, which is a market indicator that is positively correlated to the euro USD. So they were forced to secure their gain, or some of them to close some trade, or to reduce their bearish enthusiasm towards the euro zone. Okay, so this is what is happening now. All right. All right, it makes sense. So you see now, though we are technical traders, okay, we must constantly pay attention to economy news at forexfactory.com, Google Finance, Yahoo Finance. This will allow us to make excellent decisions. If you are trading stock, the same rules apply to you. But if you want to day trade or swing trade, all right, we must follow what? The trading drill. You are looking first for a setup. Whenever you enter a trade, okay, and the trade, what I've found myself over a year, using the stochastic and MACD, sometimes you will see a signal, a beautiful signal, all right, and you will take it. But 9 out of 10, the signal will fail because the setup was not solid. The traders must spend most of their time, okay, to validate their setup. So you will see professionals will spend their time looking at the setup. By the time they're going to enter the trade, they check again the setup. Is it worthy? Is it good? Can we give it a chance? Is it low risk setup? Okay. Is it high probability setup? Okay. So like I'm saying to you now, I want to buy the euro, but I would prefer it, okay, to be a little bit near here. But if I'm giving it a chance, you remember the second trailer that I draw earlier on, okay? Okay, so I will give it a chance on the edge. Okay, this is about the setup. Which setup have you used? Is it an Elliott wave pattern? Is it a Fibonacci pattern? All right, is it the market pattern? It doesn't matter whether you use any other setup. The setup must not violate the market patterns. The market pattern is bullish on a monthly chart. It's normal to give priority to bullish signal as long as we are in a rising channel. But we are below the high of last year, and also we are in an uncertainty zone. This triangle here, see this trend line, okay, and this one here, we have a small triangle here. So this is uncertainty zone. So we will prefer it to roll it down a little bit more and then push it up steadily. You may stay more inside this triangle before coming out. You see it now? So you want to find a setup, okay? Then you will look for a signal. Let's go to the daily chart. On the daily chart, as I showed you before, so if we concentrate on this short-term, price move on a daily chart, looking at this session here, remember the bigger channel is rising channel, you see? If you like, we can color it now in a different color so you can see the color of the channel that I'm talking about. Okay, the orange channel. So if you have been, you want to buy, you want to pay attention to the market pattern. Otherwise, you are fighting the market. So the market pattern is bullish. All right. In fact, we draw this line on the monthly chart, remember? So that's why I was saying to you, I would prefer the euro to continue its move on the edge. That would be better. But if you find a support here, if I want to buy, I would prefer it to go above. If it couldn't come down to retest this beautiful trailer here, in that case, all right, I will be patient, allow it to go above the turquoise line, which is the short-term equilibrium price level, and pull back, retest it. Okay, and from there, if I receive a buy signal, I will take it. All right, so this is about finding the setup and waiting for the signal. Once you see the signal, so you see a valid setup. So when we see a setup, what do we need to do? We need to go to higher time frame, go to the yearly chart, quarterly chart, validate the setup. Once that's done, and that's the professional following the step. One thing you do not want to mess up with, okay, is don't fight the market pattern. So you receive a signal, you want to enter the trend. If you are bullish at the time when you are about to enter the trend, the short-term trend must be bullish. Right now, looking at this session here, the short-term price move is bearish. Yes or no? Okay, the short-term price move is bearish. Yes or no? This is the short-term price move, okay? Is bearish, okay? But so we will, in normal condition, that's what I'm saying to you, I will prefer it to come down, okay? First, that will be the best scenario, and then come out of the short term. Then we wait for the short term, trend to start getting bullish. That's when we can enter the trade. At the time when we are about to enter the trade, if we are bullish, the short term trend should be bullish. At the time when we are about to sell, the short term trend should be bearish. If you work it, sometimes if you are an investor buying for long term, provided that the fundamentals are solid, they buy anyhow because they are taking a bigger risk. Talking about the risk-reward ratio, they are taking a bigger risk for the short term, but for the long term, the reward is quite high. But if you analyze, the investment on a short-term view, so if, for instance, somebody decided to buy like this, in a short-term analysis, this is crazy, all right, because the short-term market pattern is bearish. But somebody who is buying for long term, who can manage and control the risk, expecting the price to go all the way to 14500, that remains to be seen, or 1400, That remains to be seen. For that person, okay, the risk in relation to the reward is acceptable. But somebody who is day trading or swing trading, the timing of the trade, even for an investor, the timing, I see sometimes investors invest, pension fund invest, some of them do not know how to time the market and they get into trouble. The timing of the market is about the entry point. So they set up the signal and a low risk entry point. The short-term trend on the daily chart is bearish. The market pattern on the daily chart is bearish. All right, so you see now, if you want to buy, at least let it come out of it. If it's not pulling back, at least let it come above the short-term equilibrium price level and to retest it. And we will give it a priority to bullish signal above the short-term equilibrium price level. If we go again to the 2-hour chart, here we are on the 2-hour chart. On this 2-hour chart, you can see that the trend line that I draw on the daily chart, the price is hanging above the daily chart like this. I don't like this when the price come out of, so the market was bearish, now the price come out of the channel and just sitting on it. I don't like this. The best thing that we told traders, if it's truly bullish, very often, because what is happening is like a rugby, all right? Rugby. So one group of players catch the ball, they run with the ball. They don't want the other rugby player to catch them, so they run. The same thing will expect the price when you see, because here is the transition from one group of rugby player to another group of rugby players, so to speak. So the bear were dominating during the short-term move. Now it's out of the bearish channel on the 2-hour chart. We will expect these rugby players, so to speak, to run away with it first, which is probably moving away from the trend line. This is great for us to see that before pulling back to retest it, okay, and okay, running away. I don't like it when it's just go up and standing here. It's not running away. We want it to run away from it and then to come back to it and then before running away again. It makes sense? It is also powerful. This is about, okay, eyes wide open Forex trader. Trading on the edge of a trend line, value support, a value resistance level, using the trading drill and the top-down trading approach. As you can see, we were analyzing the Euro USD from the monthly chart, weekly chart, okay, daily chart, down to the 2-hour chart. At the time when we are about to enter the trade, if we are bullish, the market should be, the short-term trend should be bullish. If we are bearish, the short-term trend should be, okay, bullish, all right? If you are bearish, short-term trend should be bearish. If you are bullish, short-term trend should be bullish. On a 30-minute chart, here we are. You can see that these are, okay, if you allow me to draw many lines on my chart, okay. On the 2-hour chart, on the 30-minute chart, you can see that the price came out of the chart, the bearish channel with this rising channel here. So if you want to buy on a 30-minute chart, okay, you will expect okay, to pull back again a little bit on the edge of this okay, channel on the 30-minute chart, okay, and then take it from there up. But remember, we are below the short-term equilibrium price levels. All right. I don't want this video to be too long, and I hope you have learned something from it, okay, to make excellent decision. Remember the short-term equilibrium price level. Professional will always look for opportunity to buy at a value support level, at the key levels. Okay, professional will always look for opportunity to sell at a value resistance level. Okay, do exactly the same thing. Professional will combine the technical trading with the fundamental. Do exactly the same thing. Go to Google Finance, go to Yahoo Finance, go to forexfactory.com. Know when the news is due, which impact the news will have on the market. Professionals do not violate the market pattern. Okay? Long-term investor use a cycle. And using cycle, the one is not fighting the market. All right? So do exactly the same thing. So if you were selling a euro like this, you want to sell a euro, you see the rising chart. So you see, that's what they sold it here on the edge of this trade here. So a high, lower high, okay? Do exactly the same thing and trade on the edge. I'll move my short-term equilibrium price level again. It's a 13638. Exactly there, okay? You see, so you retest it and then, okay? So do exactly the same thing. So we can also pay attention to this trailer that I draw down on the 30-minute charts. Okay, pay attention carefully to what we are doing here. Okay, so you can make excellent decisions. Sometimes you may have a losing trade, okay, but you won't be angry about it. Sometimes you may have a losing trade, it may affect you. You get very upset because maybe you missed something, or your concentration was low that time. Maybe you were hungry, or you were tired, you were over trading, you were tired, and so your concentration is not well. So, or you were rushing to the trade, you were impatient. So, all right, you will be upset. But if you follow the correct procedure, you didn't violate the market pattern, and you work everything carefully, and it work against you, you won't be happy about it, but you won't be crying about it either. Okay? All right. This is the end of this video about IWise Open Forex trading. The short-term equilibrium principle is at 13638. The ECB has cut interest rate. General market participants want to sell the euro. At the same time, we have insecurity in Iraq. Crude oil is going up, which is a market indicator. If crude oil continues to go up, the euro, will follow suit. Until the next time, enjoy yourself and be very happy. We are the TSTW, 24 traders. Speak to you soon. Voilà, c'est bien fait.